Good evening. This is the Elliott wave update for the NASDAQ 100 and the S&P 500 for Wednesday, November 23rd, 2022. The markets actually reacted and performed as I had expected that they would in their current position under the current labeling and counts. We got a little bit of everything, but the greatest disappointment, I guess, for me today was the very, very muted response to three market-moving economic data deliveries, and then one that was so-so. And the market did eventually come in and do as I expected, but it was well after the numbers. So here in the NASDAQ, I'm starting here on the hourly chart. I'm just really going to focus on this. I continue to be satisfied that this is likely an X wave. And then this is the start of the second ABC. And that ABC will be going up. So the A and the C wave will be rising and the B wave will be down. So, which is why this is an X. So if it all plays out, we should continue to see and eventually get above 2012. And then on the outside, we have additional resistance at 12,004 or 12,500 basically. And that would be the next level. And what we got coming up on Friday is, of course, expiration. And right now, you see that the play in Apple, at least based on what I witnessed today, it is probably right where it closed. 151 to 150, down to 149, 148.50. That seemed to be the range. Now remember, with Friday's expiration, they have options that will expire on Friday. And so it's a shortened session. So again, you know, they're going to have to compact everything they need to do and maybe a little bit quicker. So my opinion is that we are very likely going to see both sides play out, but I think in the end, it is the longs that will win, or I don't know if we call it win, but will take it over on that day. And by the close, I believe that the market will be higher. Now, intraday, we can have some nice moves like we did today. And that was across the board. And let me just see if I can get this up and then back down. So you can see that, you know, this includes the opening. So that's the from 9 until 10 Eastern. So it includes the opening, and then the follow-through was great. We reached the session highs, and then right after had a great sell, had 2 hours of a great sell. So good moves. You had to have patience, and you had to just let them work their way through it, because there's a lot of trading in between and a lot of trading in a very, very tight range, up 5, down 5, et cetera, et cetera. But eventually it did follow through and you got the move. So overall, it was not a bad trading day. It was just extremely boring. And you really had to have the patience. So hopefully you had something else to do in between. You can always keep an eye on your screen. Anyway, Friday, shortened day. Not expecting a whole lot other than thin markets, likely with a bias to the upside. We have, again, the real first resistance in terms of the move comes in up here. Excuse me, up here at 12,112. In fact, that high is 12,119. So we're looking for it to move above that level. When it does, it should clear all that. It should find, just because it's the round number, 12,150, 12,175, and then 12,200. And if you remember, and I'll put them back on, we have a couple of levels. And again, this was just kind of looking for the A wave, but it did show us on extensions what all of this could do. So again, we have on the larger for the intermediate wave 2, 618 sits up at 12,500. And in my mind, folks, it really is in the picture. It would not surprise me, move me, catch me off guard if it were to continue to rise and get up to 12,500. And by then, people that sit and watch the market like we all do every day, they'll be going nuts about the bulls are in control, we're going higher, and all the rest of it. So trust me, it's all going to be a part of what they're doing. And I can't guarantee you that a lot of it's going to be fundamentally based. So that's the big thing. Yes, the economy still matters. Yes, interest rates will still have to do what interest rates are going to do, which is they need to be raised so that we can get a hold of inflation. All of that remains, but we are having a counter trend rally. They occur regularly in all markets. So while the trend remains down, we still have room. We're going to go up. I'm not saying that Friday we're going to end up at 12,500. It'd be quite the rally. Today, you can see still decent, 123, not bad, but this would push pretty far. But I think we can get it all going and get up maybe above here. Again, Friday, shortened day. Downside, I think it's going to be contained. And what I mean by that, it gets contained in between moving averages. So we got the 200 period SMA, just about at 11,750, and that contained things today. And on the upside, I don't really have anything there, but just shy of 11,900, it had tested it 1, 2, 3, 4 times, only exceeded it once, by a small margin. So I think that that will remain the case on Friday. Again, half day, expiration, putting in place. It looks like they're going to come in and they'll want to buy it. So over in the S&P, same story, except different count. What I think, again, still in that intermediate wave 2. And what we have now is, again, like I said, I changed the labeling, turning this into a 5-wave advance, which now, of course, it fits much cleaner than trying to count it out as, you know, a double ABC, and then what was all of this, et cetera, et cetera. So we're now back in to a 5th wave up, which again is breaking down into its own 5 as it should, sub-minute. And I believe what we may have just finished here is actually just sub-minute wave 3. We get a pullback and then another jump. If not, then there is the finish for that sub-minute wave 3. They already put the 4 in, and now we're heading up into the 5, which would find resistance at 40.62, which would produce a new high for this sequence. But we have 618 at just below 4,100, 4,098. And what I can do is take that off and do this. Well, I'll leave it on for right now. But what I can do is now change everything and go to a 3 and then a 4. And we'll see. So I go from the bottom of this wave 2 to the top of this wave 3, if this is the case, folks. Okay, so these are just preliminaries. And let me just make sure I got that down. Come bring it down here. Yeah, looks good. Okay, so this would show us if indeed this is 2, this is 3, this is 4, where 5 can come in. So wave 5 would be 618. If this is the case, it would be 618 of wave 3 comes in at 40.65. What's in that new highs we're looking for? But has additional room. Now, if this is the 5th wave would be 618 at 40.65, and then we're going to come up to 40.75, and then really this one it may provide some resistance, but in my world, if it's going to get this far and not try to make a cleaner cut to get up to 4,100, you know, I don't know, but I don't particularly count on this, but it can provide resistance. What I do look at is on the little bit larger picture for this 5th wave, where wave 5 would be 618 of wave 3, which is a common, is 4,098, right below 4,100. And then you see where this 5th wave would be 100% of the 3rd wave at 4,103. So guess what? We got a nice, clean, in my life, in my view, we got a nice, clean resistance. Only 2 levels, but clean. And coming in where they are in the waves that are being produced, the relationships on a Fibonacci basis are clean. They're good. So I like that, and I like this. But to finish 5, I think we need to go above it. So that is that. And again, downside, I'm going to think the same thing, at least for Friday. I'm going to think of the same thing, that it's not really going to come off a great deal. Right now, it was held at 4,003. And I would look for 4,000 down to right now where the hourly 50 is at 39.99. So again, 4,000. And then we have the additional SMA, 50 SMA at 39.91. And then additional support at 39.83. So if it wants to come down in a fourth wave, that's fine. And we still got to go up. Now that one I think would contain downside, but I think we can get both on Friday. We'll see. Anyway, that's all I'm going to really talk about tonight, because there's really not much else. Again, volumes were light in the futures market. Some of the stocks traded well. I don't expect too much beyond that. You know what? I will take the time if somebody, I'll talk about that another time. But what I want to talk about is the bonds real quick. The 30-year bond, when we pull it out and we take a look at the weekly chart, it's an ABC. And where's the 236, which is pretty low? 129.10. 382, if it's a little way forward, that works. And that brings it up to 136. Do I think it can get up to 136? In the current iteration within the equity markets, it would put the rally into a whole different degree. So if it does, then I'm going to be more convinced that we do head up towards much higher levels. And when we really look at the big picture, put it into on a weekly basis, it's nothing. It's, yes, a relief rally. Yes, business is transacting. People that have been wanting to get out of bonds, people that want to get in bonds, they want to lock in rates, whatever they're doing, it can go up to there. 10-year note. Same deal. Oh, first, I got to do it this way. When I look at the 10-year note, same deal, but it's 113.280. So it's getting closer. In fact, it was trading above 113 today. So a little bit more pop, and that 10-year note's cooked. Well, I think. Because don't forget, when we look at it, really 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It declined for 10 weeks. We're putting in a little bounce. It needs it. So the next move, of course, will, rate. So this, along with what we think that the Fed will or will not do, this is telling us something different. So when this is done, and I would suspect that we're going to get it done before December 14th. All right. I'm going to leave it right there. Hey, guys, have a great Thanksgiving holiday. If you're trading on Friday, good luck. Keep everything in mind. Be ready. Be flexible. If not, next update will be on Sunday. And happy Thanksgiving, everybody. I will talk to you then.